Good. So we talked about that what the system is actually. It's an order to be efficient. To get an order, you need resource, and that's money. So money supply is an important part. Then circulation of money. Who controls that? These two are controlled by central bank. What is investment? Anything which can bring you. What can I write here? What can I write here? Anything which can bring you the interest, the return, right? Negative or positive, it doesn't matter. Anything which gives you a return, that's an investment. Important steps, regulatory body, make laws. Who's going to do that? Central bank. Financial institution, they create money, only depository institutions. Why it's like this? Sure. Financial institutions create money, only depository institutions. Central bank is there to define laws, issue money, and transfer money through clearance process. I told you what is the clearance process. So this is the central bank. It has an account for every bank, like Bank of China, ICBC, Agriculture Bank of China, right? Every bank has an account there. So if I'm a customer of Bank of China and I'm giving money to ICBC customer, so first I tell my bank that means actually on phone on Alipay I'm just doing it. So Alipay is a brokerage firm between bank and me. So I send Alipay to take money from my account and to give to the other person's account whose account is in ICBC room. So Alipay gonna tell the Bank of China. So Bank of China gonna deduct the money from my account, but it will send to central bank where ICBC is also there. So Bank of China says that before we used to deliver the check. Maybe you are unfamiliar with the checks. Yeah. So in check was given to central bank, and central bank is clear that check and give it to ICBC as a proof, and then ICBC release the funds to this account, and this person gets the account. So apparently we see that within minutes it happens, because now there are no checks, so everything is now numbers, right? We will talk about that, how we turn out to be just using numbers rather than paper money and rather than cards and different checks. Now we only use numbers, our coins, right? WeChat coins, and now there's Bitcoins. That's a total different phenomena. We will learn about this in hopefully this last session, or maybe next Friday session. So wait until the next Friday class, and we will talk about this Bitcoins and paper money and how it developed. If we have time, we will cover this. So from there, this number goes to central bank, and that's how the funds are being released. You already know this. So US system of central bank is known as Fed, Federal Reserve of Bank of America, right? So that's a central bank. So every country has a central bank. So let me tell you one thing. Similar thing happens at an international level. So international level, there's a World Bank, or there's another place where all the banks from every central bank. For example, if I'm transferring money to someone in US, right, through my bank, so I give it to my commercial bank. My commercial bank will give it to the central bank of the country, and central bank will then go to the international body where each country's central bank is sitting there. Means, I mean, the person representing the central banks are sitting there. So they clear the international check from each other, and that they will give to the central bank of another country, and then that bank will clear it to the commercial bank. Yeah, so hopefully you can hear me, right? There was some distortion. Let me see, what is it? Yeah. So that's how international banks, they clear their transactions, right? So it's like a tough situation, and that's why there are international regulations to control the different transfer of money in different accounts as per law, international law, right? Now, money and a monetary system. I told you that there is a central bank here. There's a central bank here. So it issues currency, and laws means money supply. It controls money supply, and it facilitates the transfer among different banks. So that's a simple version of a central bank. Central bank does a lot of other things as well related to the financial policies and other stuff. But for now, this is enough for you, because I already explained it on the whiteboard before, right? If you can see the video, how can I see the video? I cannot see the video. Maybe you can see the camera now. Yeah. So you see this diagram, this flow, this chart flow from central bank, which defines law and money supply, and then there are four. Then everything goes to the banking system, and the banking system, they create money to other transfer moves and financial intermediate. They also work as a brokerage, which they assist the savers to spend in certain security. Now, asset. What is an asset? What is an asset? What is it? Anything which you own, that's an asset, right? Anything which you own. Now, this is the function of money, how the money functions in a system. So now you understand, like, the basic monetary system, an overview of a monetary system, that what does a monetary system constitute of, and now we talk about the functions of money. So what is an asset? Asset is anything which is yours. That's it. By all means, which is completely yours, perfectly yours. The sense of ownership, right? It can be it can have two versions: the real assets and the financial assets. Real assets means physical ownership, like your house, like your car, like your bag, like your mobile phone. That's your assets, right? It costs something. It costs you some money, right? So you spend the money and you bought the real assets, which is physical, and that's completely yours. That's not borrowed. That's nothing. What is the borrowed ones? Those are the liabilities. We will talk about the liabilities later on. But until now, we will see that what is financial assets. So financial, the real, any asset can be in real sense or in sense of numbers. So this one is a real sense. Oh, maybe let me show the on the board. Why my camera is stuck? You can see the board. Yeah. Let's talk about asset. What is asset? Anything you completely owns. That's asset. It can be in real sense. It can be in a number sense, numerical sense. Of course, from the word numerical, you know what I'm talking about, right? Real sense means physical. Physical, you know, like your mobile phone, anything you can touch, touch physical. Whereas numerical sense means money, right? Money you can also touch if it's in a currency shape, but usually you deal it with the money, with the numbers, right? You deal money with the numbers. Now, hence we can say there is a real asset and financial asset. So what belongs to here is a real asset, and what belongs here is a financial asset. Let's talk more about the financial asset. What is financial assets? Financial assets include mainly money. Most importantly, it includes money, but it also can include other things. For example, promises, contracts, any kind of contracts which deals money. So we can call it financial contracts. It can be your house contract. It can be when you buy a car, the seller gives you the booklet of the car. So on that car, it's written that he had bought this to you. So you put your name on that booklet. So it can be any contract which deals numbers, means which deals money, right? So all these are the financial assets. Of course, money includes coins, paper money, yeah, and then numbers. Nowadays, we are dealing only with numbers, number money. We will say what do we call that, okay? So don't worry. Promises. You already know that. What are the promises? What are the promises? Quickly. Can anybody answer me? What are the financial promises? In what shape we can see financial promises? Come on, any bold student who can tell me what is promise? Promise is that I will give this thing back to you. And in financial world, what is the promise? Promise is not what we say. Promise is what we give on the piece of paper. That means security, right? So any kind of security is a promise. So all those securities comes here. Stocks comes here. Oh, somebody answer me. Let me see if he or she answered correctly or not. Wow. Yeah. Okay. I can see Shu He Young. Rest I cannot read. Okay. Good enough. You all are really well listening to me. That's good. You made me happy. Hence, this can include securities, debt. What kind of securities? Mainly debt securities, and also equity, but mainly debt securities, because that's actually a promise. That's actually a promise. Um, then financial contract, as I told you, any contract which deals with money is a financial contract. Money itself is that. So these are some examples of the financial assets. Remember, not all the financial assets are, mostly all these things are backed by the real assets. So financial assets are backed by real asset. Believe me, if you don't have home, if you are not rich, if I know that you don't, the money is not gonna come to you in like next few months, I'm not gonna trust your promise, right? So you will be unable to sell your security. So that's why there must be some real asset behind the financial asset. Then you will be able to borrow. Then you will be able to use your financial asset. Otherwise, you can't. Um, Same thing, if you don't have money, of course, you don't have financial asset, right? So mostly the financial assets are backed by the real asset, but not in every case. Sometimes it's not backed by the real asset. What are the examples? What are the possible examples in which money is financial assets is not backed by the real asset? We will see these examples in next slide thoroughly. But for now, let's talk about, because as we are dealing with money, right? I told you in a very first lesson that what is money? What is money? What's money? Just a piece of paper? No. Money is not only a piece of paper. Money is anything. Anything can be money. Remember one thing. We are just recognizing this red piece of paper as money, right? Which we call 100 RMB or 1 RMB money. So, but anything which can represent a value of another thing. Now we are coming to that how the money develops, right? So anything which which carries the value for another thing, that's money. For example, I have a cell phone, right? I have a cell phone, and if I can give this cell phone and I can buy bread, so I can use this as money. So first thing, anything which is can be converted into the value of another thing, that's money. That's what people used to do in barter system. People used to people used to sell goats and buy leather. People used to sell clothes and buy food. People used to sell food and buy some other tools, right? So there was a barter system which we were dealing until the 19th century. The money comes just recently. It's just like less than 100 years we are dealing with this kind of money, and it evolved suddenly so rapidly that now there is a chance that it will disappear again. The money will disappear again. I mean, like the paper money. Money is still, since from the beginning of the civilization. Sometimes the money was used, the leather was used as a money. Sometimes the paper was used as a money. So that's yeah, exactly. What we can exchange for the value of another thing. That's money. I was just reading your messages. So anything which can represent a value of another thing, which can we can exchange the barter system, that's money. But because there are so many things, and not everybody accepts everything, so we turned that thing. We made an intermediary notes. That's currency money. Now, second thing, if you control money in any society, you control everything. There is a really good book, Economic Hitman. If you had a chance, if you are a book reading lover, it's really interesting book. You will know a lot. Economic Hitman. It's like it's the way how the financial experts they can sabotage any economy. They can undervalue the assets of any country. How do they work? How do they manipulate? Because they have information. They are the experts. So if you had a chance and you can find this book, just read it. It's a really nice book. It's by John Perkins, I think. Yeah. economic hitman. And you will know what's nowadays going on with financial or trade conflicts between US and economics, US and China, and other part of the world. So that how a big and a good means a good big rich country implants the economist or the financial expert which can undervalue their assets. So that's a really nice book to read to go through, right? Now, second thing what money does is the store of a value. When you have a cash, if I give you some currency, you keep it for a moment, right? And then you're gonna use it. Either you're gonna sell it, or either you're gonna invest it, or you're gonna consume it and you buy something else. But for a certain time, you do keep it in your hand. What is that? That is store. So anything which you can store, which has a store of value, that can also be called as a money. For example, milk can be exchanged with other things, but milk is a perishable good. After 2 days, it doesn't have any value, or after 5 days, it doesn't have any values. It will be expired, right? You cannot use it. So if you cannot use it, you can't exchange it. But money, you can keep it with yourself, and you can use it whenever you want. Like I'm talking about the currency money. So or anything else which is durable. So another characteristics of the money is it's durable, right? And that's why, what is liquidity? In finance, this is really common word, liquidity. Usually we refer the cash form. You know, how much liquidity do you have means how much cash do you have, right? So how much liquidity do you have? It means how much cash you are having. If you keep it as a cash, you might lose. But there is a problem with the store of money, right? For example, I don't want to invest. I just want to keep it because there are certain people who really love money to be in their hand. So they just wanted to grab money. I'm just kidding, okay? Just joke. It was just a joke. So, but like, if you store money at home, you will lose something. What will you lose? What will you lose? Anybody? Okay, we got the answer. Exactly. You lose the value. You lose the possible return. You lose the possible return on that cash which you could have earned if you would have invested in the market. So it's not a good idea to hold money. There is another problem. You possibly lose the return, and you can also possibly lose the value. That is in the shape of inflation. How, like for example, you have 100 RMB, and in 100 RMB you can buy a cake, a chocolate cake, right? But you don't want to buy it, and you can sell that chocolate cake into market for 110 RMB. So you can earn 10 RMB. So if you keep the cash, you will lose that 10 RMB of return on the money. Plus, you also will lose. Let's say after like a week, the cake prices goes higher, and it's now 120. Now with 100, you cannot buy the cake. You need 120. So there is again you lose the value of the money. Third thing is very important. Like you can also lose. There is a cash hoarding risk. What is that cash hoarding risk? When you hoard cash, there is a risk that you may lose it. You may tear it. You may the cash may be stolen from you. The cash may be lost by you. So there is a risk of losing that money. So you also are bearing that risk. So all this together, it's really hard to keep the money in your hand or in your pocket. So it's always better to either you can consume it to fulfill your satisfaction, or you can invest it. The best way is to invest in anything, smaller or bigger, it doesn't matter, but you should invest. Now, so what did we learn from here? When we talk about the liquidity, so liquidity means how easily, because with the cash money, 100 RMB, it's really easy to buy anything. So liquidity means how easily you can sell, you can get the value of another thing. For example, the mobile phone's liquidity is not, it's not that easy, right? It's really hard. Maybe some people they need it, maybe they don't need it, right? So it's not easy for me to exchange a mobile phone for another thing, but it's really easy for me to exchange money for another thing. So that's the liquidity, the power of exchanging into another assets, or into another value, or into money or something else. Whereas money has no exchange cost. If I sell mobile phone, I may lose some money, right? For example, I have bought like for like I don't remember, but I think I bought it for like 4,000 RMB, something like that. So now if I sell it, it will give me the 2,000 RMB maybe, right? So I lost half of the money. But whereas money has no exchange cost, you just transfer money without any extra cost. You don't need to change it first. So that's why we call it liquid asset. Except the inflation. Yeah, if you input the inflation, then it can lose the money, as I told you. Then it can lose the value. So what does money do? Money represent a measurement unit, like RMB, like US dollar. So it can also measure things. It means giving a value, right? That means money represents a measurement unit. Let's see how the money developed over the time. That's an interesting story. It's more like a story, because I'm going to tell you some historical dates as well. So what we see, the current currency money, it's actually started in US. And there's a long story behind it, but we're going to cut it short so that everybody can understand. So it's more theoretical. So I think I should share the screen. So I'm going to change the screen to share. Oh, now I can also see myself. That's good. That's better. No, I cannot. Something is wrong. I don't know. Well, you can see the screen, right? No, something is wrong. Something is terribly wrong. I can see multiple screen on my computer, so I should turn it off. And I should share the screen now. Yeah, now, why do I see multiple screens? Anyway, I'm not so much into technology, so pardon me if you can see some technological mishaps. Okay, can you see me, by the way? If you can see me, that's perfect. If you cannot see me, that's also okay. That's fine. You have already seen me many times. Just kidding. So let's see. Yeah, I forgot to mention this on the whiteboard. So let me mention here about what is the net worth. Net worth of any individual, any assets, any individual's assets, or company or country. You remember we talked about the deficit and surplus. So that can the same formula. What is the asset? What is your asset? Real and physical. And what's your liability? What is liability? Liability is the debt you have to repay. You have to return. For example, you are running a business and you are selling mobile phones, right? And you get, what's your assets? Your assets are all the stocks you are carrying. This is your mobile phones. Maybe 1,000 mobile phones you are selling. Liability, they means you owe me like 5,000. You owe someone else in the classroom 5,000. You owe someone else in your family like 10,000. So let's say your mobile phone worth 100,000, and what you owe to others is like 20,000, right? Let's say 20K. So what we gonna do? What's your net worth? I can calculate your net worth. I say, oh, your business net worth is around 80,000, because 20,000 is not yours. You need to give it to back. That's how different rating companies like Moody's, like other rating companies, financial rating companies, they rate different creditors, different businesses, different countries. So if a country has an income, again the same thing. If the country has an income less than what they owe in the shape of a debt or in shape of international loans, that's define the worth of that country. For example, let's take any example. Let's take a country. Uh, let's take Sri Lanka, right? Because nowadays there's like Sri Lanka is in really in under high budget deficit. So because I was just writing something on the Sri Lankan economy, so I knew. Now, what happens? Sri Lanka owes a lot to international bodies. Sri Lanka need to pay money back to China. Sri Lanka need to pay money back to IMF, World Bank. Sri Lanka need to pay money to ADB, Asian Development Bank, because at the time, different times, Sri Lanka borrowed money from these institutions. Also from Shanghai New Development Bank, which is Chinese kind of a IMF version. And now their assets are lower than, means their income is lower than their debt. So it means they are more to pay. It means they are liable to pay. So that considered as their liability. So net worth is always asset minus liability. So each one of you can get your respective net worth. So just consider yourself and see how much money, how much assets do you have, and how much money do you need to give back, right? How to increase the net worth? Here the finance comes in, and here you come in. Like you're gonna give, based on your financial knowledge, you're gonna give an expert opinion how to increase that net worth, how to invest your assets in such a way that it get generated, keep generating, and it surpasses your liability, and you are in a profitable situation. Okay, now let's talk about the development of money. So physical money, coin, can be paper money, right? That's physical, what we can touch. So first there was a bimetallic money in US. What is bimetallic? We were using coins. Here we were using coins. So bimetallic means two kind of expensive mineral which can be used in exchange of a value, and who are liquid, which are liquid, which liquidity is really easy. Gold. Everybody loves gold, right? So they can buy gold anytime, and silver. So in states, these two metals were used as a coins in US at first, but in different countries other than states, there can be more. There were multi-metallic money. That means it also includes copper. So mainly there were three kind of tradable. Yeah, it was copper or aluminum. Aluminum. It was copper. Yeah. So mainly there were three kinds of metals which are considered as a money. So copper was the lowest one, silver was then silver, and then the gold was like really having a high value money. So that's the metallic money. But in US and mostly like most of the countries, they have gold and silver coins. So it was really hard for countries to have a huge amount of these resources. Means you must have a lot of gold to issue a lot of currency to make the financial circle go on. Then we have full voided money. What is full voided money? Full voided means when I, as a country, as a central bank, I made a coin, right? And this coin is silver coin or gold coin. So this silver, if I melt it, and I sell this silver, it gives me the same amount as I use this coin. That means full voided money, equal. When the value of metal equals, when the value of metal equals to the number of the face, that is, if I sell it and it gives me 2, then it means it's a silver coin of 2 RMB, right? It's just an example. Token money means that nowadays with the currency, the coins we are using, they are mostly token coins. They are just for the sake of tokens. The actual value is not included. The cost of making, simply, the cost of making the coin is less than what's written on it. Right? That's a token money. That's a token coin. We also can use token money. Maybe you have heard about this token money, that sometimes you want to sell the house and there are many buyers to buy that house, but someone comes to me and say that I really like this house, but I don't have that much amount of money today, but I give you the token money that this house now belongs to me. So he might give me like 20,000 RMB, and rest of the money he will give me later on, after 2 days or after 1 day. So that's a token money. So token money, it means symbolic money. So here, token money is that, token coin is that coin which value is less than its face value. For example, if it's written that 1 silver coin, but actually the silver inside the coin doesn't worth as 1. It's worth less than 1, maybe 0.5. So that's the token money. So these are about the coins. Let's talk about the paper money. What is paper money? Paper money is revolutionary for financial institutions, because actually the role of financial institutions starts from paper money. If there is no paper money, if there is no paper money, then the role of financial institutions are really limited. Look, unless, remember one thing, maybe I can turn on the camera to make a face-to-face talk with you. Remember one thing. Yeah, unless there was like metallic money, there was not such a role of financial institutions, because financial institution goes mostly on the promises. Do you understand? So in case of paper money, that can work, because actually paper money is a promising note. It's a promising note that I have this much gold of yours. Whenever you need it, you bring this paper to me and I will return your gold. It started like this in the beginning, in 18th something, in 19th century, late 19th century. It started like this. Now what happens, if there is a metallic money, silver and gold, financial institution probably non-existent, because they are just working as a security building where they can secure people's money, people's gold, or people's silver. That's it. Some part of the institution can work, for example, borrowing and lending, but mainly they are there to secure the money and they charge some fee. But with the financial institution, with the paper money coming in the picture, we have more room to invest that promise, to sell the promise, to trade the promise, and to generate the profit from nothing. And sometimes that may create the bubbles in the economy, which can be burst and which can hit the crisis, just like it happened in 2007 and 2008 crisis. The house prices, what was it? It increased. The inflation, unless you have metallic money, you don't have inflation, right? Because it has the same value, especially the embodied coin value. But if you have like paper money, there's a chance of having real inflation. Now, when we talk about paper money, it was really revolutionary for financial institutions, specifically in a profiting way. It multi times it increased the profitability of these institutions. Same thing, first paper money was issued in 1865. In a form of gold certificates. Let's say I'm a financial institution, right? I am running a financial institution, and you have a lot of gold. You come with my gold, and I'm credible. I'm credible. People trust me, right? I'm a credible person. So I wrote a letter, and you give me the. Wait, let me bring the paper. I wrote something that I owe you. You are giving me, you're depositing me this much gold, and this is a certificate that your gold is kept with me, right? It's written, I signed it. And with any time you can come to my institution, not even if I'm not there, even if I'm dead, but my like children, they're gonna give you back your gold if you show this certificate to them. That was the gold certificate. Right? And it was in 1865, it was first time launched. That was the basis of paper money. So one thing, remember, based on future tax revenue rather than the silver or gold, it converted them. Now I don't have the gold, but I'm doing the business, and I say that, or the government say that I'm gonna get the tax in future, so you can buy my currency note. Whenever next year you will come, I will give you that amount of gold. So based on future transaction, the government is issuing the currency note in the economy. It happened before. Now it doesn't work like this, okay? But it started in this way. That I'm the government, I issue the paper note, currency note, and I said like next year, whenever I think I will get this much tax revenue of gold and other things, and like crops, and you can come to me next year, and by show this, until that you can use this piece of paper to buy anything from the market. So but next year you can come, or anybody can come with this piece of paper after next year and can exchange with the gold. So that's how it started to happen. Then in 19, I think, yeah, let me see. Yeah, in 1878. In 1878, because the gold is like high value, not everybody was having gold. Most of the people, they were carrying silver as well, right? But actually, mostly silver. So in 1878, so first silver certificate was also issued. That I'm telling you in states, in United States. In other countries, the time must be different. Uh, yeah, not the same years. So first silver certificate was in 1878. Now, even like then some institutions like who doesn't have like who didn't have like so much assets to issue the certificates. So what they started to do, they started to sell the small scale silver certificates. What was that? Even if you have little amount of silver, you can get this certificate by depositing your silver to me. Now, what did the financial institution actually did? They gathered all the gold, and at that time there were not so many private financial institutions, so mostly public financial institutions. So what did they do? They gathered all the gold and silver to one center point. Now they can easily convert the scenario on the paper money. So before that, since the Chinese history, like 5,000 years, these metallic monies were in transaction. But these financial, because they wanted to be developed, they wanted to get into the market, they want the finance had to improve, right? You need to learn finance. That's why they did it. Just a joke. But mostly, the yeah, exactly. That's why you need to learn because for you, the whole financial system was developed. So what the financial institution were very clever. So they gathered all the gold and silver and they put it into the central bank. So at first, central bank was issuing note based on the same amount of silver and gold. But now the need of the currency paper and the demand for the money was increasingly, but the countries they were not having that much resources. So that created literally a gap. So then the central bank decided, okay, we don't have that much money. What we do, we can reserve 20% of the total amount of currency paper we issue to us. So every country should maintain 20% of gold reserve. That's why we need gold reserves. So every country, some countries even they have more than 20% of the gold reserve, but minimum 20%. Every country, so that that country can be credible and people can do transaction with them. We still have 10 minutes, remember, so don't go away right now. Okay? I can see there are like 62 students. Anyway, so this is known as fiat money. Fiat money. Fiat money. What is fiat money? Fiat money is a paper money with a promise legal tender by the government. What we are seeing right nowadays. For what? For making payments. And let me write it and then I will explain. So it's a promise legal tender by the government for mainly to pay and to discharge their debts. It can be public debt, it can be private debt. So simple, it's a legal tender. And if you see, not now, but like maybe when it started in 1960s, in 1960s, the paper money, current paper money. If you take 100 RMB to the central bank, I mean to the People's Bank of China, and say, I want the gold equivalent to 100 RMB on the books, the central bank is liable to pay you the amount of gold equivalent to 100 RMB, but it's only on the book, not real. Okay, that's where the financial institution comes in, and they said, okay, let's circulate this paper and earn more money. Then there is a credit money and deposit money, right? You can see. Oh, no, you cannot see. Sorry, I didn't share the screen. I need to share the screen. Cancel, and you need to. How can I share screen? It's not sharing. Okay, now it's sharing. Yeah. See, so based on future tax revenue rather than silver or gold, this is paper money. So first was in 1865. Why is not working? Hmm. So here, first one in 1865. Then silver 1878, then 1929 to 1963, small silver size certificates were there. It's missed typo. Fiat money, legal tender, it was in 1960, something like that. And then what is credit money and deposit money? That's interesting to know. Credit money is the money backed by the credit worthiness. Let's say I started a business and I want to sell something in the market, but I don't have, means the market guys, they don't have enough money. So based on their credit worthiness, that how much worthy they are, if they are worthy, if they are trustable, I can give them credit, right? So based on their credit worthiness, I can give the products to the person, to the seller in the market. And when the seller will sell the market, sell the product in the market, then he can return back my money, right? So it's kind of a credit money. So credit money is backed by the credit worthiness of the issuer. Take an example, when you do business on credit, hence fiat money is a kind of a credit money. So paper money is also kind of a credit money because this you believe, you trust the worthiness of the central bank, and that's why you use that. So whenever you need the gold, you can take the 100 RMB note back to the person bank, back to the People's Bank of China, but they're not going to give you, but they will admit that on the book it is there. But where? In numbers only. So the credit worthiness of the depository institution that issued the deposit is asserted, is also a credit money. For example, demand deposit. You go to the bank, you open the account, right? So demand deposits, check able deposits, right? You write a check and you give it. So what is ATS? Automatic Transfer Service Account. It provides for direct deposit to and payment from checkable deposit account, wages. For example, your scholarship money comes into your account directly, and if they need to deduct money, they can take the money back as well. So usually wage accounts, scholarship money accounts, checkable deposit accounts, these are ATS accounts, right? Then we have debit card. Debit card, it provides direct transfer of deposit amount. For example, your debit card is also your bank card you are keeping, and plus your Alipay is also your debit card, kind of, it works like a debit card. Then plus your WeChat payment. So it means first you have, in credit, you don't have money in your account. The bank gives you the loan on the base of your credit worthiness. Debit, you already have the money in the bank and you use direct transfer through different platforms, Alipay, WeChat, and all these things, right? So these are different development happened in the money over the time. So hope you have gotten, you have understood today's lesson. Next week we will continue from this and we will go to the next chapter. So we will finish chapter 2 next, and I will give you the homework next Friday. Now, one question for what's your name? Let me see. Uh, and sorry, yeah, Wang Shu In, right? Wang Shu In. So I couldn't see the homework. So if you can link me the homework, that will be perfect.